What's going on, guys? This is Lior and welcome back to my channel. Now, what I thought I would do in this video, it is the end of April, so my mind is still kind of going through all of the taxes, is talk about actually some of the big tax advantages you can get by investing in multifamily syndications, right? Because a lot of the other videos I do talk about the passive income and the equity upside, and that's all great. That's all pre-tax stuff. But what we don't talk enough about is all the incredible tax advantages you get when you invest in multifamily. So I'm gonna break down the key things you need to know, and we're gonna get after it right now. What's going on, guys? My name is Lior, and welcome back to my channel. Now, before we go all in and talk about taxes in multifamily, two super quick things, guys, for you. Real quick, number one, if this is your first time on my channel, first of all, welcome. I'm Lior. I'm a multifamily investor based here out of Boston. Guys, if this is your first time on my channel, make sure you subscribe to my channel. And number two, guys, if you've been thinking about investing in real estate, in multifamily, let's say you don't want to do all the operational work, all the on-the-ground work, and you just kind of want to put your money to work. Me and my team get so many calls from you guys that are exactly like that. We work with people just like you. You can invest in some of our amazing multifamily offerings all over the country and create that passive income stream, gain that equity upside, and of course the tax benefits, which we're going to talk about in this video. So if you're interested in that, make sure you click on the link, schedule a call with me and my team, and we will definitely help you out. Now let's get right into the meat and potatoes of the video. And as I said, guys, what we're gonna do is talk about all the incredible tax benefits that come when investing in multifamily, right? Because you know, the big thing, of course, you guys may hear about if you're considering doing this is you can create amazing cash flow streams. You know, if you're investing to value add deals, there can be big profits you can make as well as a passive investor, right? So those are certainly great and amazing things, and I've done plenty of videos on those. But the tax side is so key, so huge, and that's what I want to focus on. And we're going to talk about the first kind of category of tax benefits when investing in multifamily, and that is depreciation. Now, I did a full video on this channel about really talking about the details of that, so I'm not going to go in the weeds of it. But with depreciation, right, basically the way it works is when you buy investment property for rental purposes, you can depreciate your property in order to gain a tax loss, right? And typical depreciation goes straight line depreciation, right? Which means you essentially depreciate your property over a schedule of 27.5 years. And whatever those losses are every year, you can take that loss against the income produced. Now, the cool thing is when you invest in larger multifamilies, we can do things called a cost segregation study, which can lead to an accelerated depreciation schedule, right? And basically what that means for you is instead of just taking the property and amortizing its value over 27.5 years, we're gonna do a study of all the physical attributes of the property, and some of those attributes can actually be depreciated on much shorter schedules, right? From 5 years, 7 years, and so on. And what will happen is we can essentially accelerate the depreciation so we get more depreciation every single year. And why does that matter for you? Because by taking more depreciation, right, we can create a bigger loss on paper for you. And by taking a bigger loss, as a passive investor, you can use this to deduct your tax liability from other passive income sources you have, right? So let's say I'm an investor, real quick, let's do an example, right? Let's say I'm invested in a syndication, I put in $50,000, right? Let's say I made $3,000 as passive income from this syndication this year. They paid me $3,000, fantastic, that's a 6% cash on cash return. But let's say my depreciation came out to $8,000, my share as the investor. That means I have a negative $5,000 depreciation, which I can use to offset my tax liability on $5,000 of passive income from other sources, whether it's real estate or business, right? So if I'm a strategic investor, I can essentially mitigate my passive income liability, tax liability from other sources. Absolutely huge. So critical. Again, if you haven't seen my full video on this, make sure you check that out. The second kind of benefit on taxes I wanted to highlight with this is the carry forward, right? So we just talked about how you can create this amazing paper loss on when you're investing passively. But what is cooler is it's not like this is only applicable the first year, right? So let's say in that example, I had minus $5,000 of depreciation I can use. If I don't have $5,000 of tax liability the first year, it's not like I lose that benefit. In fact, what happens is we have something called a carry forward, which will allow me to carry that benefit forward in future years and use that in year 2, year 3, whenever, right? So let's say, for example, I'm an investor and a year after I invested in this deal, I invested in another deal that paid me $5,000 in passive income. Now I can use that carry forward, that $5,000 I lost this year on paper, carry that forward, use that against the other $5,000 I got, and boom, now I have no tax liability on that new $5,000. And you can see how powerful this is. You're literally creating income for yourself tax-free. Absolutely huge. Now, number 3 thing I wanted to talk about is the cash out refinance. Now, here's the thing, right? Obviously, one of the big benefits of investing in multifamily is the passive income. But of course, if you're investing in value add deals or investing in growth markets, more than likely, there's gonna be some equity created when all is said and done, right? So what happens is, you can of course sell the property, right, in order to realize those gains, but you're gonna get hit with capital gains, which we'll talk about. But what a smart operator can do is instead of selling, they can do a cash out refinance. And in that cash out refinance, let's say you get some proceeds back, right, because you've cashed out X amount of dollars. Again, you have a % ownership in that building, so you get your pro rata share of those proceeds. The cool thing is, on cash out refinances, those are tax free, right? We do not get taxed on cash out refinance proceeds. They're treated as a loan. So you get those tax free, which if you think about it is huge, right? Because we basically just made some of our initial equity back, right? Through that cash out refinance, we got a huge chunk of money back. We still own a percentage of that property that's still gonna continue to create that passive income stream, still gonna continue to create depreciation every year. Plus, again, we literally just got a massive chunk of money back tax-free. So this is absolutely huge. I'm a huge proponent of cash out refinances because you can return a lot of equity tax-free. Amazing, amazing benefit. Now, the next thing I wanted to talk about is that capital gains tax rate. So, at some point you probably will sell the property, right? And here's the thing. One of the advantages of investing in a vehicle like multifamily syndication, right, which tends to be over a longer timeline, right? It tends to be at minimum 2 to 3 years. We typically underwrite to 5 years, right? But it tends to be a multi-year process. One of the advantages of investing in something like that versus maybe investing in a flip, right, where you are in and out and you kind of make your money that way, is on a flip, because you own the property for less than 12 months, you're actually subject to short-term capital gains tax. This can actually be pretty high, ranging up to the mid 30% range, right? So that's a pretty stiff tax rate. But when you're selling multifamily, especially if you've owned it after several years, all your gains are going to be classified as a long-term capital gain, right? So the actual amount of taxes you pay, the capital gain tax rate on that is going to be significantly lower than the short-term capital gains tax. And that long-term capital gains tax rate can be about as high as 20% or so. So big difference in the amount of capital gains tax you're paying on the proceeds you made, right? So another huge win for investing in long-term multifamily over something, maybe as opposed to something that's quicker like a flip. Now, the next benefit I want to talk about is mortgage interest. This one you guys might be pretty familiar with, but with mortgage interest, that's another tax deduction, right? You can basically deduct the total interest paid on the loan. Again, that can create additional losses for you guys as an investor. And we already talked about how you can strategically use your paper losses to offset your other gains. And finally, the last point I'll talk about, you probably are familiar with this, but it's certainly in play with multifamily, is the 1031 exchange, right? Now, I will say it's a little bit less common with syndications, right? Because you have a bunch of people all involved together. What's the likelihood that everyone's going to 1031 into another property together? It certainly happens. Not super common, I would say, but that option is there, right? So if you wanted to 1031 your proceeds for the proceeds of one sale to the next acquisition, you certainly could. You wouldn't pay any capital gains tax, and of course, that is the beauty of the 1031 exchange. So those are some of the big tax benefits of investing in multifamily. Absolutely huge, absolutely key for you guys to be in the know-how, because they provide massive, massive financial benefits outside of the passive income stream, outside of the equity upside that we've already talked about on this channel so much. So you can see I'm super passionate about this because they are so, not a lot of people know about these rules, but there's so much financial benefit here. It is insane. So hopefully this is helpful for you guys. Of course, if you have any questions, comments about this, make sure you put your comments below, and I will definitely help you out.